Hello, everybody, and welcome to our first podcast we've had in a long time. How you doing, Vince?
I'm doing fabulous, Andrew.
Can
Thank
you
you.
can you hear me? Okay.
I can hear you just fine.
All right. We're just going to work out a couple of the details. We're trying to get everybody connected, so you guys stand by, and we're going to start here in about 1 minute. Just let me. Okay. Looks like we're good there. And you hearing everything okay, Vince?
Yeah, I'm good on my end. Can you hear me good?
Awesome. Yep, I can hear you. So anyway, really quick, for those of you who don't know me, my name is Andrew Sesta, and I'm a realtor for the Kai's Company. And with me today is Vince Castoro of Capital Partners Mortgage. So again, how you doing, Vince?
Good. I'm real excited to be here. For those of you who are online, you should be as excited as I am. This is really your first step towards home ownership. We're going to be a lot briefer than what you may think. I'm really going to talk about our first time homebuyer programs, down payment assistance, the benefits of being represented by a realtor, what the costs are to buy, how to fix your credit if you don't think you're eligible, and really break it down in as simplest terms as I possibly can.
Absolutely, that's awesome. So
So,
really quick, I have your bio here up on the
uh,
slide. So can you give us a little input as to
sure,
what
yeah.
makes you the master?
Uh, this bio just means I'm old. So, I'll tell you, Andrew, and knowing me for as long as you have, closing 10,000 transactions, or personally or managing them, I will tell you there is nothing more satisfying than handing the keys to a first-time home buyer. The rest of
Absolutely, I
this,
totally agree.
great, but here's what I want the message to be today is we want the people who really want to know if they're eligible for home ownership to know now. But to also, if they're not eligible now, put them on the path to home ownership, by providing
Absolutely.
them, with 31 years doing it locally, I have my underwriting designations for Fannie Mae, Freddie Mac, FHA, and VA loans. So um, please know that this is coming from the source, and the information coming to everyone out there is as accurate as I could possibly deliver it to you.
Absolutely, absolutely, Vince. So basically, being that this is marked as a first-time buyer seminar, we're going to talk about the ABCs of getting a loan and a mortgage. But we're going to do briefly. Again, if you have any questions, it's best to contact Vince directly. But we do just want to go through the elementary steps and talk
Yeah, and
about a
those of
couple
you
of these
who
things.
Yeah, and let me mention this. The YouTube channel has some helpful videos to our first time buyers, goes a little into detail. They're only 2-minute videos on FHA loans, VA loans, and some of the real basics. So please make sure you take down my email address. We'll email you a copy of this presentation. Our online loan application is directly beneath that. You can scan a code to get to our online loan application. But what's critical here is if you're not getting everything you need to out of this presentation, just shoot us a message and we'll get right on
Absolutely,
it.
absolutely. So let's get into the first slide, if we could, there, Vince. And we're going to talk about, like I said, we're going to talk about the ABCs and some misconceptions, basically the home buyer's journey from start to finish. Okay, so our first, excuse me, here's the basics. So let's go over that, Vince. So what are the basics of, somebody wants to buy a home. What's the first thing they need to do?
It's really this simple. If you're even thinking about whether you qualify for a home loan, either your realtor or we are the first step in the process, because I promise you the process is not as hard as everyone makes it out to be. There are only three factors in determining someone's eligibility for a home loan. Three. You can go online and look at stuff and confuse yourself to death and get different answers about different things. I promise you, your ability to buy a home is determined by how much you make versus how much you spend, which is fancy for income to debt ratios, how you pay other people, which is your credit and your credit score, and how much cash or equity you have to put towards the transaction. That's it. It's
Right.
really nothing more to this. The rest are calculations and programs, and you know, you don't need to be an expert in all these things because we are. Your
Right.
realtor is. So
So that's the advantage of coming to you directly instead of trying to do some research online, because it's almost like self-diagnosing yourself for a medical thing by going on and typing in these questions. So it's best to come directly to you or someone like myself to get those elementary questions answered. Correct?
and I think that's an excellent point. I don't get my medical advice from YouTube, right?
Right.
So, at the end of the day, no one, yourself, your Kai's agents, myself, we don't need to sell you something. We're here to provide you accurate information. And at the end of the day, if you're looking to purchase a home, if the value is created that met your expectations, then yeah, we'll help you buy a house.
Correct. Absolutely. Absolutely.
So,
Just want to
the first step, go ahead, Andrew.
No, I just want to check and make sure that everybody's hearing us. Can you guys, if you're hearing us, give us a thumbs up in the comments section. If you're not hearing us or you're having an issue, please type it in the comments section. I can read the comments from Facebook, and we'll go from there. I think they're having an issue at the Hutchinson Island office.
It says when we click on the Facebook link, we're the only ones in the meeting.
Yeah, I don't know what he's talking about. I see it posted. If they just go to the event page, Dominic, if you just go to the event page and open up that link, I could see we're live. I've got several people in my feed. If for some reason it's not connecting correctly to Kai's, which it should, you could go to Andrew Sesta on Facebook and give me a thumbs up. So it looks like I've got several thumbs up in my Facebook page of people saying they can hear us. So I thank you for that. And just bear with us 1 minute, because we have a first-time buyer seminar also going on simultaneously at our office on Hutchinson Island. And they're having an issue. Stand by, please. Dominic, I'm seeing it on the Kai's Facebook page as well. So I'm not sure why you guys aren't seeing it, but if you go to the Kai's Facebook group or page, it's simultaneously going there as well. Okay, hopefully they'll work through that, Vince. So let's continue, and then again,
Yeah,
we
I
could always
think
touch
we
base
left
back.
off with yeah, I think we left off with the three things that are needed to be done to qualify. But let's talk about the actual steps in the process. So if you're thinking
Absolutely.
about buying
So
a house and you're not paying cash, you're going to need a pre-approval lender. So it's important during that process. We're going to determine what price range you're in, and that's critical. You don't want to be
yeah,
looking at
absolutely.
$600,000 houses when you're trying to stay within a $2,000 payment. So
Right.
we'll provide you, or your lender will provide you, what your payments would be, what you qualify for, and you need to see if that meets your budget, and, any lender will never, and I think a lot of our first time buyers don't realize that there is not one loan program that would allow you to exceed 50% of the entire household income. So, for example, if the household was bringing in 8,000 a month, we would not let you exceed 50% of that to cover a new housing payment, car loans, credit cards, student loans, personal loans. So you're always going to have a pretty large cushion, maybe and certainly probably a lot more than what you have left over after you make a rent payment. So just to cover this slide, you want to meet with us, apply, and this way we could tell you exactly what price range you need to be looking in, exactly what your expectation should be as far as a cash investment, and exactly what your payments are going to be.
Absolutely. Absolutely. Okay. So let's talk about the different loan programs, Vince, that people can qualify for. Can you go over those really quick?
Yeah, and some of you out there may have heard these phrases before: conforming conventional loans, or your basic everyday 30-year fixed rates. You can qualify as a first-time buyer with as little as 3% down. Single family, owner occupied, primary residence. Non-conforming loans are those where, and there are relatively few of those, but they are out there. We have stated income loans, bank statement loans, um, loans where if the rent payment exceeds the total monthly payment, you'll qualify. Those are considered non-conforming loans, which do require a much larger down payment and have a higher interest rate. So 95% of our clients fit in the conventional, or what we also known as government. These are government-backed loans. FHA, which is your predominant first-time homebuyer program, 3.5% down, and a VA loan where, for eligible veterans with certificates of eligibility can go zero money down. So those are the big three: FHA, VA, conventional loans.
Okay, perfect, perfect. So basically, what are the three C's of lending? What are lenders looking for from the buyer?
So, and we touch base on this. The three big ones are, credit, how much income versus how much you spend. And, the type of property is important. Double wides are financed different than condos, which are financed different than single family residences. But again, I can't reinforce this enough. No one out here, including my agents, need to be a professional. You don't need to know every single guideline. We do.
Correct.
So, yeah, these are the basic three that we talked about a little earlier.
Okay, perfect. So one of those is credit and credit score, and I know that that's always on top of mind with people trying to figure out, what their credit score is. My app tells me my credit score is this, but you're telling me it's that. I know we get a lot of that back and forth as the agent.
Oh, yeah.
So can you just give a little quick synopsis of the credit score, how it works, and what it really means?
The first thing I'll tell everyone who's listening to me right now is please, please stop getting so hung up on what you think your credit score is. Mortgages are as basic as you can get. They are pass fail. If you're under a 580 credit score or 560 for VA, you fail. If you're over 580, you pass. It's really that simple. So conventional loans do require a 620. We're going to talk a little bit about first-time homebuyer programs, down payment assistance, bond programs. Those usually require a slightly higher credit score, 640 typically. But, at the end of the day, the other thing that I wanted to get across is a lot of the people listening here look at what's called a consumer credit report, your credit karma credit score, your Experian consumer score that comes with your credit card. I should let everyone know that that is a completely different score than your mortgage credit score. Your mortgage credit score on average is 20 to 30 points lower than that score.
Can you repeat that
But
again?
your credit karma, your Experian, the scores that you get with your credit cards are typically 20 to 30 points on average higher than what a mortgage credit score is going to be.
Okay.
So the reason why that's important is your credit score changes almost every day, and people try to monitor them every day, and they're so worried about credit pulls affecting their credit score. Mortgage credit reports are completely different than consumer credit reports. A mortgage credit report score or inquiry will not negatively impact your mortgage credit score. So the reason why that's important is if you're not exactly sure where you are on the spectrum, you need to rip the Band-Aid and not worry about an inquiry affecting your score, which I hear all the time. I don't want my credit pulled. The inquiry is going to lower your score. Well, the inquiry is not going to lower your mortgage credit score. And if you want to buy a house, we're going to be using mortgage credit scores. So my suggestion is rip the Band-Aid, and here's why. It's pass-fail, right? So if it's pass-fail, if you're slightly under 580, we offer free credit enhancement where we will run algorithms to tell you exactly what to pay off, pay down, reduce the balances of, to get you exactly to 581, to 621, to 641. Thanks. So as you can see in this example, we have bureau scores 608, 596, and 584 there, located right under the Experian TransUnion. Now, with this client, the potential score improvement, and I think this is important. So right now, we're looking at a client with a 596 credit score. So that makes them eligible for FHA, VA, but not conventional. Well, they may want to go conventional because they're putting more money down. There may be some advantages to a conventional loan. Well, can we get them that? Well, when we pull your credit, and again, this will not affect your mortgage credit score, we'll pull how much of an improvement we can get to. As you can see, a 608 can improve by 32 points and get to 640. A 584 can improve by 39 points. If we are able to meet the entire score improvement, the new score is 623 and now eligible for conventional loans.
Nice.
The cost for the credit enhancement is zero. So again, I urge you, your realtors have mini applications that we've provided. They can send you a link to my online loan application, or you can apply directly on the website. But yeah, rip the Band-Aid, guys. If you really want to know, it's not going to cost you anything to find out.
Awesome. And how long does this process take, Vince? How long does it take to get them that credit score to change?
So typically, in a scenario where you're trying to raise 32, 39 points, you're probably looking at only a 5 to 7 business day process. This is not months on end. And Andrew, you've probably seen, and those of you out there, if you Google credit enhancement companies, these companies charge people monthly fees, and they send information to the credit repositories and hope they don't respond, and they have 30 days to respond, and then they send something back. This could go on for years. So this is a far more efficient way to find out whether you can buy a house.
Awesome.
Now, and I'll also offer this about credit. We want to position everyone who's listening and every first-time home buyer to not only be pre-qualified or pre-approved, but to have the home buying process to be one that's fun, one that's exciting, one that you're doing with your family, your spouse, your girlfriend, your new wife. If you want to make that experience completely different, then have your loan fully underwritten by us, where we've reviewed the income, we've already fixed the credit, we've done all the legwork, the paperwork, the pay stubs, the bank statements, the W-2s. We've formally underwritten your loan based on the sales price and the payment that you're looking for. Now you're fully approved. Now walking in
Absolutely.
and viewing houses is a completely different process.
Absolutely. I try to
For
preach that
those,
to all
yeah,
the
for
people we
those
deal
of
with.
you who are Googling or going on, Andrew, what are some of the websites that your consumers go to see if houses are for sale?
Zillow,
Zillow,
Realtor.com, Redfin,
Realtor.com. If you're even accessing those sites, if you're paying cash, by all means. If you're not, I really wouldn't bother. I hate to be the person who, and this happens more often than you think. I have clients looking at $600,000 houses, or an agent will refer me a link and a client that really wants to make an offer on this house, and the buyers had no idea what the payment was going to be, no idea
right.
what their cash investment would be. So you really want to work. I don't say working backwards. I think it's working smarter. Is
Right.
if you're not paying cash, we're really your first step. It's really that simple.
Absolutely. Absolutely. Any questions out there? If you feel free to just type them in the comments, I can review them and we can get them answered for you. So let's talk about the next step. There is the income. I know that it's different for everyone, but can you just really quick let these buyers know, like, what are you going to be asking for so they can perhaps get that stuff ready for you?
So, and I'm going to go briefly. And again, I don't want to task everyone with knowing every single guideline, but the basics are your income is going to be based on what type of position, your effective income. The income we use to qualify you is going to be determined by how you're paid. If you're an hourly or salaried wage earner, we're going to verify 2 years of employment via pay stubs, W 2s. If you're self employed, and this is important, you have to be self employed and have filed tax returns as a self employed entity for at least 2 years. Now, a lot of my self employed clients unknowingly misrepresent their income because when we ask them how much money they made, they tell us what they grossed. And what's
Right.
important here is for those of you who are self employed, look, you don't like paying income taxes. Andrew doesn't like paying income taxes. My agents don't like paying income taxes. But when you have a gross income and after your deductions, the net income is what's used to qualify.
Correct.
So
Right.
that's critical. And again, no one listening to me has to know how to read their effective income on their tax returns. They just need to know that you need to be self employed for 2 years and that tax returns are the only additional documentation, which would be different than a salaried or a wage earner. Those of you who are commissioned, same thing. You just file. You're self employed. Anyone who is not a wage earner or a salaried person is considered self-employed for guideline purposes. So if you're a realtor, if you're a commissioned salesperson, if you're a loan officer, if you're
A barber,
sometimes,
beautician.
yes, my salon people, my barbers,
Right.
right? We even have a lot of our, believe it or not, a lot of our mechanics that work for our bigger dealerships. A lot of their income is commission.
Oh,
So,
wow. Okay.
yeah, because they get paid by the shop hour, not by the charged hour. Um, but
Gotcha.
yeah, when you're as old as I am, you've kind of seen it all. So, um, basically, guys, get your income docs. Once you apply, we'll tell you exactly what you need. We bullet it. You don't have to write all this stuff down. We see what you do for a living on your loan application. We say you need W-2 pay stubs, you need tax returns and 1099s. For those people who are retired, you're certainly eligible for every one of these programs. We just ask for different documentation. It could be an awards letter from Social Security. It could be a pension letter saying that you get X amount for the rest of your life. It could be interest income. It could be IRAs. And at the end of the day, again, you don't have to be a pro at this. We'll tell you exactly what you need. We'll tell you exactly what you qualify for. And if you don't qualify, we're going to tell you why. Because, when you're around 30, 31 years, Andrew, and we've done this in the past, and I know a lot of agents that are listening, we've done this in the past where someone was self-employed and their net income wasn't enough to buy at this point, we coached them and told them, hey, this is the path to home ownership. You're just going to have to take less deductions next year. And they do, and they come back, and now we drop 1 year's income. Now we have more income that we can use, that we can average. And those people who follow the path, they come back to us, they're homeowners today. And nothing makes me proud.
Absolutely.
That's the key.
And I have to give a shout out to the Capital Partners app, which a lot of my clients really like the fact that they could just upload these documents directly through to you guys, and it makes the system work so much faster. So
yeah, and
really
the agents listening and any buyers, your agents who invited you here will share the eTrack app. They already should have it on their phone. If not, a quick call to us. We'll send it to you. You can do mortgage payments, upload your documents. It's completely transparent. eTrack is by far, I would say 90% of our clients prefer to apply that way. It's just faster, it's safer, and it's just more efficient.
Absolutely. Okay, as far as assets are concerned, can you go over those really quick?
Yeah, real quick. So, your cash to close is the sum of your down payment, closing costs, and monies needed to establish your escrow account. You don't need to know that calculation today. Here's what's important for this conversation. Cash in your mattress is not okay.
No suitcase, no paper bag,
no paper bags,
like
no mattress money. If you are sitting on a load of cash, there's a very simple fix to that. You slowly deposit it into an actual bank account, and within 60 days, it's sourced and seasoned where a lender can use it. Now, the other thing that I think is important is a lot of people listening, or are first-time buyers, I should say, they may not realize that all monies to cover your cash to close, down payment, closing costs, escrows, can be in the form of a gift. That's perfectly acceptable under every conforming conventional FHA and VA program. What's also important is to reduce your cash to close. You may be eligible for down payment assistance, which we'll get into. But the other thing is, if you're short on cash, a contract can be negotiated where your agent is asking the seller to pick up a portion of these costs. Whatever the seller does agree to pay on your behalf is a dollar for dollar reduction in your total cash to close. So again, another reason why it's important to be working with an experienced realtor is they will negotiate or help you negotiate your contract to structure it in a way that you can actually buy the house. And that's what's critical here.
Absolutely. Okay.
Oh, let me do the repeat after me.
Repeat after me.
I will not deposit cash into my bank account while I am in the process of buying a home.
Amen.
Please, no lump sum cash deposits. Please.
Right. Absolutely. So we'll have to let our people know that, because I've been in it a while too. I'm almost as old as you, probably older. And I've seen people come in with suitcases when I've asked for a proof of funds. One guy in a shopping bag. It's like, we can't use this for your escrow deposit. You got to go put it in the bank.
Right.
And they can't figure out why. Cash is not king.
And I think that's a perfect analogy. I always use the Super Bowl bet analogy, and the Super Bowl bet analogy is, you had a side bet with your friend on the Super Bowl for $1,000, and he decided to give it to you finally so you can buy a house. He hands you cash, you deposit cash. Cash deposits are simply going to be subtracted from whatever balance you have for qualifying purposes. So every $5 you stick in cash is going to be, I shouldn't say that. Anything really over 1,000 or more is going to be questioned, but. Try not to deposit cash, especially during the processing.
Okay. Great tip there, buddy. So, why rent when you can own? We just touched on this briefly. So let's talk about that.
Okay. I give me your opinion on that,
I have strong opinions on. I was just battling someone on a podcast about some of the things they say, but go ahead.
So I'll give you mine, and because you are far more experienced in this conversation than I am, please feel free to add on to this. So, um, you know, everyone here started out making someone else's mortgage payment, right? And what's the reason why so many people today are on the fence about buying is interest rates, interest rates. I keep getting, I'm worried about interest rates, interest rates. Well, yeah, rates were down in 3%, which was the first time since we've been tracking it, and they're not there anymore. And your agents will tell you, those of you who've been around long enough, when I started, they were 12. So rates in the sixes are not as painful as everyone thinks. But here's my opinion on whether or not you should rent or own. So, Andrew, I'll ask you this question. Over the last 3 years, how much have homes on the Treasure Coast appreciated on average over the last 3 years?
Whew. Annually, at least 25, 30%.
Okay. So over a 3-year period, the average would be 30%. So based on that, a $300,000 house that I bought today next year would be worth $330,000. The following year would be worth about $375,000, and then the year after that it would probably be worth $450,000. Is that kind of accurate?
Yeah, over the last couple of years, that may fluctuate,
Over the last
but
couple of years,
still.
even if you wanted to make that 10%, my $300,000 house that I buy this year, in the worst market, we haven't seen 10% appreciation. We're not at it yet, right? So let's go worst case. So the $300,000 house I buy today, in a worst market that I can find, the worst market in the last 10 years, is worth $330,000 next year. Do you think that's conservative?
Yeah, absolutely.
Okay. So if I buy a house today and my house went up $30,000 in 1 year, and my mortgage payments were $2,000 a month or $24,000 a year, I'm ahead $6,000. I actually haven't, although I've written a check, theoretically I'm living here for free, aren't I?
Absolutely.
So
Absolutely.
if my house is worth $30,000 next year more, and I've only made $24,000 in mortgage payments, am I even really making mortgage payments? Yeah, I'm writing the check, but my wealth is increasing, my houses are increasing. Statistically, your house will double in value, and this goes back to the 20s. Your house will double in value in 16 years. Double.
Right.
So,
Absolutely.
why should you own instead of rent? Well, because at the end of the day, yeah, the monthly payment may be $200, $300, even $400 higher than it was 3-4 years ago. But if you don't get on the appreciation train, which means your house going up in value, then you're still in the starting blocks.
Absolutely.
So taking the rate concern, is one I hear every day, and one I say, okay, well, and I use my son. Nicholas purchased a 4-bedroom, 2-bath, east of US 1 in Port St. Lucie 4.5 years ago for $245,000. The house is worth $440,000. And he calls me, he says, hey, Dad, my taxes went up, my insurance went up. And I said, your house is worth $180,000 more than what you paid for it. Who are you crying to?
Right.
So
Absolutely.
when people ask me if my mortgage payment is higher than my rent payment, but it's still, all my payments never exceed 50% of all my income, why would I ever rent a house? What happens when the seller decides, your lease is up in 90 days. Oh, I just want to give you a heads up, I'm selling the house. What control do you have over that? You have no
You don't.
control. You have no
Over the
control
last
whether
couple
you
of
can have
years,
dogs, whether you can put up a fence, when you can do this.
I can't tell you how many clients have called me in the last couple of years, especially, where their lease is up and the rent's going up $600, $700, $800 a month. I mean, there's no cap to that. At least
There is
when
no
you're making a
cap, yeah.
mortgage payment, this is the mortgage payment, barring the taxes going up or the insurance going up. That's your payment. And the other way
Yeah.
I try to explain it, Vince, and maybe this may make sense to you, but a lot of people say, well, 6%, 7%, I'm just throwing that money away. Well, how much of the rent are you throwing away? 100%, right? 100% of that payment when you write to your landlord, that's gone. You could never
It's
recoup
going
that.
towards your landlord's appreciation that we talked about, right?
Absolutely. So, like you say,
So,
it's either you're paying a mortgage. Are you going to pay your own, or are you going to be paying someone else's? So that
well, and
argument to me doesn't make sense when people say, "Well, let me rent for another year and give your landlord $30,000 in rent because that's the average here in Port St. Lucie." So you're gambling $30,000 to next year. Hopefully, the rate be down 1% and the housing price be up 10%. It doesn't make sense. It just doesn't
well,
make sense. And like you
especially, and
said,
go ahead.
if you look at the history, the graph of house appreciation from the 1920s to today, there was only one real major dip, and that was in 2008 and 9, where we saw it drop down and then go back up. But in the long run, I bought my first house 28, 30 years ago in Port St. Lucie, brand new construction, for $55,000. Sold it
I was
28
right
years
when that.
later. I opened a business. I sent my kids to school from the equity from that house, and then sold it for over 300,000. Where would I
Well,
have been if I paid rent all those years?
nowhere,
Make sense?
because 90% of the wealth that you die with is the equity in your home.
Is
Okay.
100%.
So,
Absolutely.
and here's
Absolutely.
another point. I kind of use my in-laws on this one is, um, like you said, you bought a house for 55,000. They bought a house for 45,000. Their payment was $550 a month, and it took them everything to get to that payment. Well, the mortgage programs that we're talking about are fixed rate mortgages, which means it's equal monthly installment payments until the entire balance is paid off. And what that means is if I gave you a $2,000 mortgage payment today, in 25 years, it's still a $2,000 mortgage payment. So it's not only your house is appreciating, in 20 years, a gallon of milk is going to be $22. In 20
Right.
years, a gallon of gas is, if we're even getting gas anymore.
Right.
But the fact is, getting out of the starting blocks, as I like to put it, your payment never moves. What do you think? And I'll just use this as an example, Andrew. 20 years ago, minimum wage was $1.50, and a six-pack was probably $3. So if my payment never moves, of course my income goes up incrementally, right? And no one is ever going to tell me, well, shame on them. If you're working for an employer today and 20 years later you're with the same employer making the same amount of money,
Right.
but your mortgage payment never moves. Your income will go up, but your
Right.
mortgage payment will never go up. So
Right.
that's my opinion on renting. So
I hear you. And we could probably have back and forth on this subject for an
yeah,
hour, but basically
we
what we
only
just
have an
wanted
hour
to,
today.
yeah, right.
So yeah,
But
I'm
it's so
very
true. I mean,
passionate
this is a
about
big
that.
debate.
Yeah, I'm passionate
Absolutely.
about it.
Me too, because I've seen so many people making that mistake and then kicking themselves in the rear the following year or the year after, especially the appreciation that we've enjoyed over the last 3 years when people say, wow, I wish I would have bought 3 years ago. Well, it's
Well,
kind of like
or
jumping rope. At a certain
and
point in
I'll
time,
leave.
you got to jump in.
Yeah, and here's another critical point because you brought up something that reminded me. I had a Martin County deputy that could have bought here in Martin County in the Oaks, and he thought 325 was too high, and he got under contract and hemmed and hawed and haggled and back and forth. This contract was declined over $5,000 in sales price.
Wow.
That house the following year was $70,000 more than it was when he could have bought it haggling over $2,000.
Right.
And guys, with the app, or I'll just tell you this, and you don't need to write it down. $5,000 in sales price makes a difference in your monthly payment of, sit down, strap in, get ready, $35 a month. So, sales prices aren't going to move the needle as much as you think, guys. So don't get so hung up. We do an appraisal to validate the value of the house. So you don't have to worry about overpaying for a house, because if the house doesn't appraise by an independent third-party professional home appraiser, you don't have to buy it. That simple. There's really not a lot of risk that people think that there is.
Awesome. Let's move on. So
Okay.
now we're going to talk about the hot topic right now is the down payment assistance programs that are out there. So I hear that there's some good news ahead, Vince, about the down payment assistance in the Hometown Heroes program. So can you start off with that?
Yeah, so Hometown Heroes is by far the most popular down payment assistance for 3 reasons. One, it provides the most amount in the form of a grant. So the critical news is, effective July 3rd, Hometown Heroes has eliminated the first responder or medical or educational field requirement. And what that means is any full-time, 35 hours or more, employee within the state of Florida is now eligible for this program. So I want to say that again. The Hometown Heroes program is now eligible to everyone who's a full-time employee here in the state of Florida. That's what we're here to talk about, Andrew. So I can't be more excited about this. The basics of the program are simply this. You receive, for eligible clients, let's talk about eligibility real quick, 3 main components. 1, you need a 640 credit score. Okay. 2, you have to be a first-time home buyer, but I want to make sure I define what lenders consider as a first-time home buyer. A first-time home buyer is someone who simply has not owned a home in the last 3 years. So I have clients tell me all the time, I didn't know I was eligible for this. I owned a house 10 years ago. I owned a house 20 years ago. I owned a house 4 years ago. Anyone who hasn't owned a house in the last 3 years is a first-time home buyer. That's 1. 2, you need a 640 credit score for this program. Again, we talked about that. If you're not at 640, we will get you to 640. If you're never able to get to 640, we'll just go another route. We can go FHA with the seller paying all your closing costs. It'll equate to almost the same benefit to you. So there are income limitations, but very few people are going to hit the income limitations, which are combined household income of $125,000 annually. So the neat part about that is, and again, only specific, and you don't need to know all this, but for my agents out there that know a little bit more about the program than some of our first timers, the neat part about this program, which is unique to this program, is if I have a husband and wife, and the husband makes 120 and the wife makes 50, their combined household income, it's thought that would exceed the program requirements. So, and I'm corrected on the income limits. They just raised them 128 to 50. So, under this program, if the husband alone qualifies or the wife alone qualifies, I just eliminate one of the buyers. On other bond programs, they require you to provide tax returns to prove the household income. This program, you do not have to do it. We consistently remove a spouse, a co-borrower, because we don't want to exceed the income limits. And under this program, we can do that. So getting back to that first-time home buyer, veterans are exempt from that first time homebuyer requirement. Veterans can go out of a house and sell a house on a Monday morning, buy a house using Hometown Heroes on a Monday afternoon. So veterans are not required to meet the 3-year waiting requirement. With us, we are a direct VA lender. Those of you who are vets who are listening in realize that your eligibility is associated to the current house. Because we are direct with VA, we can simultaneously transfer your eligibility from one house to the other and close within hours. Big advantage that Capital has. So you have your 640 credit score, your first time homebuyer requirement, income limit. Really, guys, and the fact that you have to be 35 hours, those of you, unfortunately, who work remotely, you're an IT person, or, your company is based in Illinois, but you've been working from home for 10 years and completing all your income requirements. Unfortunately, there has to be brick and mortar here in Florida. So those of you who are 1099, know that you're likely to have issues with qualifying for this because you're not an employee. So the workaround to that is a CPA letter, but again, we'll talk to you on that on an individual basis. The program is going to help a lot of people that are listening to me. The one thing I can't stress enough, Andrew, is come July 3rd, when they increase the eligibility from first responders, teachers, and those in the medical field to everyone, the state of Florida has not set aside an unlimited amount of money. We're projecting that these monies will be depleted no later than September of this year. So you really have a 60-day window. Once you've applied and been approved, or pre-approved, as we say, once you find a property, we can reserve those funds for you. And again, it's 5% of the sales price or $35,000, whichever is less. So I urge those of you who are worried about your credit score, well, let's start fixing it now, because the program's going to run out of money. Those of you who are worried about your debt ratios or your employment timeframes, let's work on that now. This program's going to run out of money. For those of you who today's takeaway, guys, is you need to be represented, and you need to be working with people who have your best interests, and know that you don't need to know every single aspect of the pre-approval process, of the contract. Andrew, our contracts are what, 12 pages?
Mm-hmm. Basically.
And they are, paragraph 3, subsection 5B. Your agent has seen thousands of these contracts, hundreds of these contracts. So again, if you're represented, you basically have a team. You have a team of professionals that are working in your best interest. So, the bottom line is, whether you think you're ready to buy a home now and you're worried about these monies being depleted, I can tell you, the first thing you want to do is start the process, good, bad, or indifferent, because we never, ever tell everyone no, but we may tell you simply not now.
Right.
And we want everyone here to be a homeowner. We want to put you on the path to homeownership. So don't worry about, no one here will judge you. 490, 820, you're not being judged. We want you to be homeowners. We like to see you, jump on the equity train.
Absolutely. So do we have any questions out there? Feel free to type them in, and we'd be happy to get them answered for you. Anyone at the Kai's office on Hutchinson Island, Dominic is out there answering questions as well. And Dominic, if you have anybody there that has any questions, please put them in the chat or text them to me. So Vince, really great program. We've had a few people that we've put through the program. and it either worked for them or you gave them a path, like we talked about. So I think that's like you said. I think the biggest takeaway for the first-time home buyers and home buyers in general from this podcast is getting started, making that first step, getting that pre-approval, getting that fully underwritten approval. So, like you said, you can go out and shop with peace of mind, knowing that that part has been handled. You know what your payments are going to be. You know what's expected of you, and now it's enjoyable to actually go out and say, "Well, these are my options." Another
Well,
thing
yeah, I
I want
mean,
to kind of stress one thing, Vince. I want to
sure.
stress is for home time for the first time buyers out there. Your first house is not your forever house most of the time. It's not like back in the old days where our grandparents and parents bought a house and and then they passed it off to another child and right. So it's
7 years.
what is it, 5 to 7 years. So your first house doesn't have to be your forever house. Just get started, whether it's a condo or something that you can afford. That's the first step because, like you said, you're building equity. I've had clients and family members, even my own children, that when they came to me and said, "Dad, I want to get an apartment," I'm like, "No, we're going to find you a place to buy." And now I have two boys that bought condos. One of them, I mean, he made a killing in the 3 years that he owned it, in that equity. And now he went into a single family home that he's always wanted in Martin County. That condo was the stepping stone to get him from point A to point B. So
That's an
that's the thing is
excellent,
get started. Get started.
excellent. And who financed those, Andrew? I'm
I
trying
think
to
it was a
remember.
guy that I saw kind of looked like you. But yeah, I mean,
Yeah, I
definitely.
mean, I couldn't have said it better. Rip the Band-Aid. Just
Absolutely.
rip the Band-Aid. No one's judging anybody. We'll get you on the path, good, bad, or indifferent. It may be information about your employment, how to improve that, your credit score, how to improve that. One thing for those of you that are currently renters, we do have a program available to you where we can take your rent and report it to the repositories, TRW, TransUnion, and EquiCredit, and have that now included into your credit score. And the big benefit to that, and again, I'm not here to teach people everything they need to know about credit scores, but credit's weighted. So as a lender, we look at how you pay your primary housing expense a lot differently than we look at your $2,000 MasterCard balance. So these are weighted differently and they affect your score differently. So for those of you who can use a quick boost and you pay your rent on time, we can actually go back 12 months and have that rescored into your algorithm, if you would, and that could change your score dramatically. And if it doesn't get you all the way there, it may get you there a lot sooner than you may think. So, we've turned
Absolutely.
490 credit scores to 650 just by verifying 2 years of rent payments. Because, common sense will tell you, Andrew, what do I really need more to approve somebody if they're currently making $2,000 rent payments on time? Why would I ever believe they wouldn't make $2,000 mortgage payments especially
Right.
when they own that?
When they own the house, right.
Yeah. So,
Absolutely.
yeah, if you get the opportunity, if you want information on that, my email address is here. The eTrack Mortgage website to download the app is right underneath my V Castoro at CP Mortgage, dash mortgage mtg.com. www.vince.etrackmortgage is your online loan app. And those of you, the YouTube page has some helpful hints. A lot of that is geared towards agents. So for those
Yeah,
of
we
you
use
who
it
are
all the
first time
time.
home
It's great.
buyers, yeah, and if you may find that a little more advanced, but again, mortgages are not as hard as everyone makes them out to be. So rip the Band-Aid, folks. You'd be surprised how many people we put in homes that never thought they could be in one.
Absolutely. Absolutely. And what I'll do, Vince, is I'm going to take your contact information after we finish here, and I'll post them as a comment on Facebook, on YouTube, so that you can just click them and go to, that E-Track system. You could go to Vince's YouTube videos and see a bunch of information that he has there, which is really great. So I don't see any questions out there. So I guess we must have done a good job explaining it, or we put people to sleep. I mean, I
Yeah,
don't
one
really
or
know
the
which
other.
one. But at least
Quick
we had a
shout
good
out.
time, right? I mean, at
Always,
least we,
always. You know.
talking back and forth. So I
Well,
hope
I think
everybody enjoyed it.
yeah, and if I can, a couple of shout outs to my, Kai's family. Kai's has been family individually owned since the 20s. They are very particular about who they hire, and I wanted to do a quick shout out to Claudia at our Hutchinson Island office and my Kai's agents listening out there. Real grateful that
Absolutely, yeah.
you
Claudia's been
welcome me
great.
into your family and have the confidence and the trust to have me work with your buyers. Really appreciative of that.
Vince, I do have a couple of questions coming in. Anne Marie is asking, is this program only in Florida?
Yes, it is a state of Florida grant, which was signed in by the governor about 2 years ago, and just being made eligible to non-first responders. Great question.
Awesome.
And
Christina,
I'll say if that person is going to a different state, you'd be surprised. Maybe a visit to wherever you're going, the county website, or a phone
okay,
call to the county about Florida's not the only one doing bond programs or down payment assistance. So feel free to inquire with
good
your local
information.
municipality. You'd be surprised what's out there.
Yeah, so Anne Marie, have your niece check in Maryland and see if they have something. And again, what we're talking about, it transcends overstate lines as far as getting her with a really good realtor and a mortgage professional that works together as a team as we do, so that they can look out for her best interest. Because some programs are better than others, some work, some don't work, those kind of things. So again, step one for your niece in Maryland is get with an agent, and we can help you with that as well, and get them with a mortgage professional. Christina Slater says, great podcast, guys. Appreciate it. We had a lot of great comments in there as far as liking the information that we had here. So again, this is going to be on YouTube, and I think, Vince, you're going to put it on your YouTube page as well.
I surely will have a millennial do that
Okay.
very
So
quickly.
I'll send you over the video so that he could post it there as well. And again, we'll be here to answer any questions you may have. My contact phone number 772-285-8702. Again, I'm Andrew Sesta, the Kai's Company. And you can reach out to me anytime. Vince, do you have any other parting words before we say goodbye?
Yeah, just Andrew, if it wasn't for you, doing these with me, I can't thank you enough. I know how much time it takes, and preparing the slides and helping us put this all together.
No
I'm
problem.
really
No problem. It's
grateful
my pleasure.
and
I just like
appreciative
getting
of
that
that.
information out there. And like you said, first time home ownership is very near and dear to my heart. I think that everyone should enjoy what we have enjoyed in our lifetime as far as, building that equity and that wealth in real estate. So thank you again, Vince. I appreciate your time. Thank you, Claudia, Dominic, and everyone that helped put this event together. I know it was a little rocky in the beginning, but again, it's recorded, so you can watch it. But if you missed a spot or you want to go back and freshen up, you could watch that as well. And again,
Yeah, and
we're
just
just looking out for
email
your
us
questions.
email us or your agent or your realtor, and they'll get you a copy of this. It'd probably take a day to edit it. Take all my
And
boring stuff.
one quick thing I want to kind of put it out there, Vince, and I didn't check with you first, so I hope it's okay. But our next podcast, we're going to talk about the cash advance program and the bridge program that Capital Partners just started rolling out. Correct?
Simply put, every person listening to this podcast, every realtor and every client that they have, I will turn into a cash buyer.
Absolutely.
That's as simple as I could put that.
So that's all you're getting for today. So
Well, you're
that's a
getting for
little
today.
the little sneak, but sneak peek at what's coming. But so look out for our next video that we're going to do together. It's going to have some great information, and you'll find out how you can become a cash buyer through this program. Thank you very much, Vince, Claudia, Dominic, and thank you everyone for your comments and for joining us today. And we'll see you on the next podcast.
Thanks, everyone.
Bye-bye.